If this conflict lasts weeks instead of days, what happened to oil? What happened to inflation? And what happened to your portfolio? That's the real question markets are trying to answer right now. We already seen the initial shock. Now the focus shifts to duration. Because market don't just react to headlines. They react how long those headlines sticks around. Let's break this down in simple terms. First, oil. If tension continues, especially after major shipping routes like Strait of Hormuz, oil supply risk stays elevated. And when supply risk stays elevated, oil prices usually stays elevated. Now you might be thinking, okay, oil goes up, but why does that matter to me? Well, because oil affects transportation, shipping, manufacturing, fuel. So when oil stays high, costs stay high, and that feeds into inflation. Now let's talk about inflation. If inflation stays elevated, central banks can't ease policies as quickly, and if interest rate stays higher for longer, then that put pressure on growth. Then guess what? If growth is what supports stocks prices, then guess what? So this isn't just about geopoliticals. It's about ripple effect. It's about the ripple effect. Oil, inflation, interest rates, stocks. That's the chain. Now here's the key. So far, we haven't seen full systematic escalation. We haven't seen broad, global military engagement, and we haven't seen financial markets breaking major long-term structure. That tells us something. We're in a risk pricing phase, not a confirmed crisis phase. Market are cautious, not collapsing. So, what are we watching? Does oil continue to trend higher? Does gold break aggressively? Do equities start losing weekly support? Because until those things happen, then this remains volatility, not structural breakdown. And as always, the goal isn't to avoid losses or try to hit home runs. It's to survive long enough to win. I'll keep you updated to your next market breakdown.